Today we're going to be looking at Lasco Manufacturing Limited, ticker symbol LASM on the Jamaica Stock Exchange Junior Market. As usual in our stock reviews, we take a look at the company overview, the financial history. So we're going to be looking at their 2022 audited financials. Then we look at their price history using JMB Moneyline, who happens to be our sponsor for this episode. Then we take a look at their dividend history. They recently announced a dividend, so we look at that announcement, look at their dividend history, and finally we'll close out with any news that we can find out about the company, talk about their company, the future of the company, what we think maybe some key things to look out for. So that's our format. Please do be sure to ask us any questions you have in the comments under the video. As usual, when we review a company, we will say we'll try to get an interview with the CEO if possible. So LASM is definitely one of those companies we'll try to do so for. And let's get started.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com.
And follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, let us pray. Thank you, Lord, for this day. Thank you for the opportunity to produce wealth. We pray, Lord, for wisdom to be able to manage our investments carefully, to make sound investment decisions. And we pray, Lord, that we will use this information to the best of our abilities and for your glory. In Jesus' name. Amen.
All right, we actually have a special guest from JMB with us.
So we have Greg Lindo. I'm going to bring him on screen now. Greg, how you doing?
Hey, how you doing, Jermaine? I'm good, thanks.
I'm good as well. Can you give us
just a brief remind us of your title, your role at JMB?
Assistant General Manager for Treasury and Trading.
Okay, perfect. So you're the perfect person to be here then, right?
I if you want to call it that.
Yeah.
Yep.
So what we'll do is, similar to what I was mentioning before, we're going to pretty much go through the same areas of the company that we mentioned before, and we'll just have a conversation going as to what we think is relevant for this company. Before going further though, I have to say that any information that we're going to discuss here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell LASM or any other securities on the Jamaica Stock Exchange or any other exchange. All right, had to say that. All right, Greg, so what I'll do is I'll start with the website, right? So we're at manufacturing.lascojamaica.com. So we're going to use this to give us the background about the company. We also have tools like the annual report that we can look at, the annual reports, and the recent financials, etc. can be found on the Jamaica Stock Exchange's website. Okay, sorry about that. Let me try this. Am I still muffled? Is that better?
Yeah, I hear you much clearer now.
Much clearer, okay.
Yeah.
Sorry about that. Thank you for that, Deborah. I'm going to just put the microphone right in front of me. So thanks for that. All right, so it says here, Lasco was incorporated in October 1994 through the merger of Lasco Foods Limited and, well, it says Lasco Foods and Lasco Foods. Maybe, Greg can give us a history there. 16 years later, in October 2010, they became publicly listed on the JSE Junior Market, widely recognized as being the leading producer of nutritious powdered beverages in Jamaica under the Lasco brand. I think we're all familiar with that brand quite well. And they expanded their scope in 2014 with their entry into liquid refreshing beverages and water categories, so products like iCool, etc. Over the years, they focused on organic growth, supported by heavy investments in plant and equipment, state-of-the-art technology, and people development in order to provide capacity and know-how to fuel their growth, right? So that's what we see here on their website. It says further down here, through constant innovation in technology, capability in product development, they are well equipped to meet current and growing demand in their domestic and international markets. Let me see there. Yeah, and these are the brands that they cover, right? Anything else you want to add to maybe our background or understanding of Lasco, Greg?
I think you've covered it well. I mean, as the name Lasco suggests, I mean that's a very powerful local brand, right? You know, everybody that is born and grown in Jamaica has probably come across Lasco in some shape or form.
Yep.
You know, and LASM is the company that is responsible for the products that you see more so than the LASF and the LASD, which are the other Lasco companies that are listed on the market. So
Yeah.
very, very, very powerful company that was started back in the early to mid 90s that has consistently grown every year. So, you know, it's very, I'm very happy to be reviewing this company.
Do you remember when they came to market? I'm not sure if I'd be able to find the prospectus. Usually, if it's more than 5 years, the prospectus is a little bit hard to find.
Yeah, I remember, you know, because I think it was around 2010.
Yes.
Around 2010. I mean, I was in the market at that time, and I remember there was a lot of talk around, you know, why is Mr. Chin splitting the companies, and
Mhm.
is he doing it to, you know, get around the threshold of the junior market, which was 500 million. Then it's still the same now, but I think what time has shown is that there are three different companies, right? I mean,
Yeah.
they have three different characteristics, and each company has its own strengths and um, is impacted in different ways. So, you know, it was one of the earlier companies listed on the junior market with Access Financial Services. So it's I'm torn because I'm like, boy, this company is really not in my mind a junior company anymore. I mean, it
Yeah.
has a market cap over 18 billion. Its profitability is in the billions. So, you know, but I mean, let's see. I mean, they have had a very good historical performance, and you know, it maybe is not as hot now as it was back then, but it's still, the company is still growing very well.
Interesting you say that, and when we get to the price history, because for me, it's a company that I don't know. I hardly see it being recommended. I hardly see it being
And that's
covered or
I,
spoken about.
I, I don't understand it. It's, you know, I mean, you're talking about a company that came to market at $2.50.
Hmm.
It went up to like what, 16, $17. It had a 10-for-1
Oh,
stock split. Came back
okay.
down. Yeah, it had a stock split in 2013. All of them, all the Lascos did. And then it
Okay.
just kind of, the share price movement would have moved on. Because, I mean, if it split, it went down to like $1.50, $1.60,
Yeah.
and it's at like $4 now. So it's still done very well over time post split. But the activity in it just hasn't been as, I mean, it's not a stock that makes a lot of noise.
Yeah.
Certainly, Mr. Chin used to be a lot more active in terms of going, because I've seen him at a few investor briefings at the time, and I used to go to those things. But you know, as he got older, you know, he became less, you know, prominent in terms of, he was always there, but not in the public as much. So
Yeah.
I don't know if that was part of the reason. Like, I mean, I remember I was at an investor briefing, and it was Mayberry's investor briefing, right? And they, Mr. Chin used to come and, it's like, listen, yo, the profits going double, profits are going double. And he used to make these assertions. And I mean, I guess at the time, CEOs were kind of more, they don't want to give guidance, and you just tell you straight, like, I'm going to grow the profit by 100%, and you need to buy the stock, and the stock freely. And I
Imagine that.
one time, Gary Peart was like, boy, don't, like, don't, don't, don't say too much,
Wow.
But,
So you're telling me, Greg, that we get more information now than we used to get 10 years ago?
in terms of the disclosures, but having Lascelles at the briefings was definitely, he loved his company, and he loved what he did, and he was very eager to share it with the public.
Yeah.
So I mean, rest in peace, Lascelles Chin. Is
Yes. Yes.
is a
I
legend.
actually wanted to mention. Yeah. Okay. So we have here the top 10 as at March 31st. So we see, does it show a percentage here? Usually what we do is do the calculation for the top 10, but this is, let's call this 81%, maybe about 85% in the top 10.
Yeah, it's about 82.5 or so. I
Yeah.
mean, I have it here. I mean, the top 100 shareholders own about 95% of the company. So
Wow.
it's a relatively, it has a relatively small free float. And
Mhm.
despite that, it still doesn't necessarily trade as how some people would expect a stock that
Yeah.
is, I mean, fairly tightly held. It's fairly tightly held. It's not, it's not a stock that has a huge amount of share float, and it's not. But again, it's just not a stock that you hear a lot of people make
Yeah.
a lot of noise over.
I've started to actually double click on all those stocks that seem to have a limited supply outside the top 10, top 100, etc. Because those
Mhm.
companies seem to, at least some of them seem to be picking up the trend in terms of, expanding that through whether stock splits or other, just ways that maybe they want to include more investors in that pool.
Well,
Um,
yeah,
so,
and they had a stock split, as I mentioned, in 2013, and
yeah,
it was the same premise, was that, oh, they want to increase shareholder value
mm,
because there was not enough shares, and they wanted to actually make the price more affordable, because when it went up to $15, the even from back then, Lascelles was like, well, if it's between $1 and $2, more people can buy it. We had
yeah.
100 share minimum rule back then, so you'd have
Ah,
to buy 100 shares minimum.
yeah,
So they went with the split. But the thing with a stock split, if if it's tightly held and you split the shares, it doesn't necessarily expand your base unless people
yeah,
sell.
yeah,
So, you know, but what you can't, if you look at the investor base of LASM, it has obviously evolved, because you may not necessarily see it in the top 10, but when you look at like the top 100, there's more pension funds, institutional investors that would have bought into this company, because of course there was not a lot of shares on offer for the IPO, so it still would have been relatively, it was heavily oversubscribed, and the investor base wouldn't have been massively wide. But now you have other institutional funds, and you look at even the top 10, Mayberry is in there. They would have brought them public, and I know there are other pension funds that would have participated in the stock, which is not something you see for a lot of junior market companies, right?
yeah, yeah. I mean, it shows you the brand sort of caliber that Lasco is, right? Because if you're seeing that sort of take up, it means that at least for those pension funds, institutions, etc., it's a brand that they trust. Because you typically will see that for like a main market company, right?
Yeah, and track record.
Yeah.
The track record is the most important thing for institutional portfolios, because they want to make sure that, I mean, when they're investing,
Okay.
they're putting their money to work, and you're developing the returns, right? It's not just about the fluctuation in price, but is the company actually doing well? That's a heavy focus for many fund managers.
Okay. All right. So let's go into the most recent report. This is audited for 2022, I believe we're
Yep.
looking at.
Mm-hmm.
So we usually start with the income statement. So usually what we look for is any sort of noticeable growth or decline in the main line items, revenue, profit, etc. And what we're trying to do is just understand if things are headed in the right direction. Of course, if there are notes, we'll go through them, and then we take it from there, right? So this is
Yeah,
for
man.
the year 2022. We saw that revenues grow, that looks like just a little over 10%. That's maybe 12 to 15%. Just rough estimate there. 9.4 to 11.2 billion.
Mm-hmm.
We'll check the notes to see what would have attributed to that. In terms of gross profit. It seems like maybe about 15% there. Admin expenses up by 200 million. Selling and promotional expenses. So everything kind of seems to have gone up by just about 10%, right? So 2.2 billion here for operating profit, up to almost 2.7. Finance costs would have decreased by more than 50%. Net profit about 300 million higher than it was before, and their EPS here is up to 50.37%, up from 41 cents here. So let's see what the report has to say about.
Yeah, the profitability growth is more like 20%.
Okay,
So
hold on, let me. 20%? You mean from the 1.7 to 2.1? 3.4.
yeah.
Okay, yeah. That's the problem with eyeballing it, right? So okay, the total comprehensive income up 2.1. That's what happens when I'm not using my Excel sheet. Apologies for
Yeah,
that,
man.
guys.
And
So
I mean, yeah, go ahead.
yeah, so I was just gonna look to the report to see what they would have attributed to the increase. But go ahead if you have anything to share. Go
Well,
ahead.
what stands out to me, just looking at the income statement, is that the profitability growth is actually more than the revenue growth, right?
Yeah.
And usually, profits tend to lag revenue growth, right? But in a situation like this, where you have increased expenses, you have about I think about 18.5% growth in revenues, they were still able to manage to grow profit at a faster rate. And
You think
that,
it's mainly due to the financing costs? Because that's
well,
no.
yeah, it's a few things. The financing costs, because what you learn about Lasco on a whole is that Mr. Chin never liked debt, right? He never liked debt. He spoke about it. He said it publicly. Like he don't really like use debt. I mean, he got. I'll give you a story. Like he spoke about using, I think it was some DBJ facility to expand his warehouses. Because it was at that time when the growth rate was much more aggressive, right? So they needed space, and
Yeah.
I mean, the way how he sounded is almost like, boy, I don't really want to use no debt, but themself to take it, I just going to take it. So, 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 and I mean, when you look at the metrics for Lasco, you manufacturing, you understand. I mean, the income statement is just the start, because it's not surprising to see the growth over 2022, because I mean, you'd have factored in things like recover from COVID, the gradual reopening of the economy. Because remember, for the 2022 financial year, he probably would have been a significant amount of that year would have had lockdowns, right, or restrictions. So this year and in 2023, is a little bit more open in terms of the business activity.
Yeah.
So that that's the context when you're looking at the numbers to say, all right, well, you see this increase, but this is the context behind the growth. But it's still impressive from the fact that it's high double digit, like 20% growth in profits, 18% growth in revenue. Not a lot of companies were able to achieve that yet. So
Yeah.
and I mean, the growth has, yes, they may have slowed down a bit during COVID, but to give you a perspective, in 2017-18, revenue for LASM was about 6.7 billion.
Okay.
Fast forward 2022 or 2023, they're knocking on 11.2 billion.
Yeah.
You can look at the math and see the type of growth in revenues that the company is doing, right? So even during COVID, their revenues were still higher year over year,
Yeah.
which speaks to the type of sentiment, the brand sentiment that they have, and their ability to generate sales.
Yeah.
Mhm.
All right. Cool. So, in terms of, it just says here that revenue growth was fueled by broad-based volume growth and pricing actions.
That
Right.
sounds like the usual. Yeah,
Yeah.
we just make some money. I mean,
Exactly.
we did some more sales, and yeah, but
Yeah. Yeah. So it says here that selling and admin expenses, inclusive of marketing investment for brands, had increased 14.6%. The increase reflects cost pressures, but notably the percentage increase was held below the revenue growth. Marketing investment was higher than the previous year as they increased their support for their brands and enhanced consumer engagement. The expense to sale ratio was 13.2% versus 13.6% the year before. So that's their notes on the. Well, let's go to the next one, which is the statement of financial position. So in terms of property, plant, and equipment, that's 4.5 billion, down from 4.7. Investments are 584 million. Do you normally know what these investments are, Greg, for
the
LASM?
notes. I mean, the notes would have it. I think if you go down to note 14, it
Yeah,
gives you an idea. In this
I'm
case,
always curious.
yeah, it looks like they have equities, their own equities. So they have quoted equities about 334 million, and they have some bonds. That they have some bonds with Barita and
I
Mayberry.
mean, okay.
So that's comprises their investment portfolio. About 584 million in investments for, I mean, their total assets are around 13 billion. So I
Mhm.
mean, still a relatively small portion of
Yeah, I'm
their.
just gonna say, is that could they actually do more, or is that what do you think is best practice for this type of
Well, I
situation?
mean, that's about 4% of their assets, and I mean, the objective of LASM is a manufacturing company. It's not an investment holding company,
Yeah,
right? And you do have some companies that have ventured into the investment holding company thing, like Jam T, right? And when you look at the performance, you will see how it varies a Jam T relative to a LASM, especially in terms of the metrics. 'Cause obviously, Jam T is a much smaller company. But
Yeah.
once you start to go into things like investments, that's outside of their core activity, right? Their
Yeah.
core activity is producing goods for sale and consumption, not necessarily investment management. However, it's good to see that they do look at actively using their cash resources to try and generate a higher a return that will pay shareholders.
Yeah.
As to how that will perform, I mean, most of it is in quoted shares. So I mean, when the market goes up or down, that's going to affect the value. I
Yeah.
mean, bonds also have different things that will impact them.
Yeah,
But
I'm seeing here the Mayberry one is a fixed rate bond that matures July 2024. So that's a year from now. And the Barita Finance one expires the 30th of June this year. So that one is 5.75% and it matures at the end of this month. So that will at least be off that 50 million. And then the
well,
Mayberry bond,
if they decide to put it in something else,
yeah, yeah.
so yeah, so I mean that's pretty much the investment, which is a small percentage of the overall balance sheet.
Yeah. All right, so let's look at their other assets here.
Right. So
So
I noticed the inventories have increased from 1.6
yes,
to 2.1. But interestingly, the receivables have remained roughly the same.
yeah,
And the thing about it, when you're looking at stocks like LASM, you have to try and find a similar type of company. I mean, in this case, I'd probably look at, say, a Honeybun, because they're both manufacturing companies
okay,
in the purest sense, right? Um, so when you look at things like their inventories and their receivables, it's very interesting to compare, because you have a company like LASM that has, when you look at their day sales outstanding, right? Based on the data we have, they roughly have about 70 days of outstanding sales to collect, right?
okay,
Um, compare that to a Honeybun, it's about 20, but of course the nature of the goods that LASM sells is probably longer term than Honeybun, right? When you look at the ability for LASM to turn over its inventory, which in the simplest terms is how many times you empty your warehouse in a given financial year, right?
yeah,
Fill it up with goods, sell it up. So the turnover ratio for LASM is almost 4 times, about 3.8 thereabouts. When you look at a Honeybun, they have a higher turnover. It's about 11.8. But the context for that is Honeybun sells baked goods which can go stale.
here you
Last
go.
time has non-perishables and stuff that they do as well. So, it's a little bit different for them. But those are very healthy ratios to show you that LASM is turning over its inventory, it's managing its receivables, and it's actually getting in some decent cash flow from, I guess, whatever the credit terms that they're offering to their customers.
Yeah. Yeah. So I notice here that they have also short-term investments. This would be, I guess, separate from what they would have listed here above.
Yeah, those are typically like your CDs, or maybe some short-term instruments that are going to come due within a year. I mean, the Note 18 would probably speak to what
Yeah.
that is, which, yeah. So
Cash and cash equivalents, that's just up pretty
yeah,
much
this is
about
yeah. So they
10%.
say the short-term investments are interest-bearing deposits invested for a period of 1 year. So it's like a deposit.
Okay.
Um, So it's not technically called cash, but it's like a fixed deposit or something like that.
Yeah. So for everything else in terms of equities and liabilities, I'll focus on the non-current liabilities based on what we're talking about earlier in terms of their position on debt. So I noticed that the long-term loans have actually dropped significantly, 157 million down to 43 million. And the deferred taxation is up by about 10 million. So that long-term loan that they had is being paid down, and payables a little bit over 100 million more, and current portion of long-term loans 114 million, down from 207. Anything you wanted to add there?
I mean, it just goes back to what I had said about John, that it's not a big person to use it.
Yeah.
If he's able to extract value out of the organic growth of the company, then he's gonna do that, which he has been doing that. So I wouldn't be surprised. I'd be surprised to see any significant debt being thrown on this balance sheet unless there is a huge justification for it.
Yeah. All right. In terms of the notes, they mentioned, we noted the increase in inventory, and it said reflecting material cost increases and increased level of safety stock to mitigate supply disruptions. And we see companies that have to hold large inventory, typically, maybe for the last year or two, the reports that I've been looking at, you're seeing more inventory there, based on just the experiences that companies have been having with shipping delays and increased shipping costs, etc. It may be more, it may make more sense to just hold more inventory as long as it's not perishable. Trade receivables were marginally below shareholders' equity, earnings per stock. So I mentioned those already. So they did have a dividend announcement recently. So I'll speak to dividends later. In terms of, let's see if there are any other notes or an outlook. Okay. So in terms of outlook, it says here organic growth.
There, Jermaine, I'm not sure if your connection is down.
Well, I'm hearing you. Not hearing me? 1 second.
Okay, you're back now.
Okay. All right. So it says here organic growth with incremental margin improvements remains our top priority. This will be driven by continued investments in our brands, innovation, people and talent development, and technology. They recognize that cost pressures are likely to persist, at least for the medium term, and could trigger price adjustments. All right. So that's, again, sounds very, very common to what other companies are doing. I don't remember the company I was reviewing where they're saying that they're pretty much waiting to see. They're not wanting us to necessarily increase costs. I wonder if it was Nuts for the Express. I don't remember. Or it was Berger. Was Berger I was looking at. So they were trying to just say that they're watching to see whether or not they need to make price adjustments or not. We will find the right balance between these adjustments and savings through operational efficiency and productivity gains to maintain affordability. We also reaffirm our commitments. Greg, I don't necessarily like when the outlook is this vague. I don't know if you agree that it doesn't really say much in terms of what's to come.
To be very honest with you, when I read that,
yeah,
it just sounds like what Lasco has been. There are kind of a, well, they used to be fast in past times, but they've grown to a point of maturity now where it's kind of slow and steady for them, and it shows in the numbers, it shows in the performance. Like, they have maintained their margins consistently over a 5-year period. I mean, their gross margins barely moved during COVID, right? As a matter of fact,
anything that you can share, or
huh?
You have anything that you can share?
Well, if you look on the annual report, let me see if I can bring up the annual report.
Have it here. I'm
Yeah, man.
actually
So
at
if you
already.
go to page 11, right, and you
Okay.
can actually see what I was talking about.
All right. I'll bring it up in a second when I'm done scrolling.
Yeah, man. So I'm just saying that outlook to me just signifies what LASM has been. It's just been steady, prudent. They don't really rock the boat. And they bring out they test the market with from time to time with new products. Like I remember when they just launched the ice cream. I haven't tried it, but that was something that they were very excited about. Unfortunately, we don't really get, as you said, the in-depth reports,
Yeah.
so we can know, all right, which products, how are each product
There
line
we go.
selling. You don't really get that. It's just anecdotal stuff if you see it on the shelves or you don't see it on the shelves, right? But they've managed their product mix in such a way that they're not rocking the boat, you know what I mean? And that's not a bad thing, right? Because they're able to churn out profits in a very efficient way. I mean, if
Yeah.
you look at their efficiency, which is really a function of the expenses over revenues, is very low. It's like 13%, and lower is better, right? Lower is better for efficiency. Other manufacturers, if you look at them, some of them are 30%, 40%, which is still not bad. So it kind of shows you how well they are managing their product mix in terms of what they sell versus their expenses. And that's how they're able to maintain um, their margins.
Okay. All right. So we've actually seen. I'll just comment on a couple of things over the 5 years. So the dividends have increased in terms of percentage paid. Well, in 2020, I don't know if this is correct. It says 60%. That's percentage
No,
change.
that's
Okay.
that's the
Percentage change.
percent.
Yeah. Okay.
At it versus profit. I mean, 307 billion. That kind of gives you an idea as to the payout.
Yeah.
Um, so
Okay.
that is around. That's about 17% or 18% payout. So the payout, I mean, which isn't necessarily high, but remember what I had said. Like the philosophy of the past chairman was to retain profits for organic growth.
Yeah.
But if you look at their retained earnings, you'll see they have a significant amount in retained earnings, right?
Yeah.
So there
So the
is room
dividend can
for them.
increase.
Yeah, man, there's room for them as long as cash flow allows to pay large dividends. And you see, these are the things now that persons or investors need to look at, right? If there is I don't expect, as long as the company remains in family control, I do believe that the principles that have guided the company in terms of how it was run will continue.
Yeah.
I haven't seen any major change in terms of management or leadership yet, but there is no room for other views to be expressed, right?
Yeah.
So would that mean more dividends? Would it mean more acquisitions? Would it mean trying new things? And that could all be to the betterment or the detriment of the company, right?
Yeah.
And that's another chapter in the history of the company that it will have to just play out.
Yeah. Yeah.
Mhm.
Well, let's see. Let's see where things go for them. I'm actually just moving over to Moneyline so we can look at the price history.
Mhm.
So again, we're going to stock market summary. So once we've logged in, and I say this for those persons who might not have used Moneyline before. So once you're logged in, you go to other services, stock market summary, and then you simply type in the ticker. We're looking at LASM today. So once you click on it there, you'll see some basic statistics about the company. I'm not seeing the chart just yet. Okay, there it's loaded. So for today, it had a low and high of $4.50, 33,000 units traded.
Yeah, that's nothing trading.
Right, so just a few transaction here, all at the start, right? So all at 9:30, and that's it, right? So no percentage change.
I don't get. I mean, here's a stock. It does well. It has good numbers. Has good balance sheet. It would probably check the boxes for a lot of things like share float. It's a tightly held company, but I don't know. I guess some persons are just not paying attention to it. I mean, if you look at, I don't. Well, Moneyline doesn't have moving averages, which
Yeah, I'm hoping that's coming out in some update.
Boy, I listen. If I could give you everything, I would.
Yeah.
It's not up to me, but yeah, that is something that will be coming in the next iteration of it. But if you look at it from a on a moving average standpoint, the signal is actually pointing bullish because the 100-day moving average has crossed above the 200-day moving average, and the 50-day moving average is looking to cross as well. So that's normally a sign that an uptrend is coming, right?
Yeah.
But the volume and the activity has been fairly muted. I mean, the last large trade, I think if you look there back in maybe October 2022, there was maybe like 2 million that traded or something like that. But there's not a lot of trading on the stock. So it's definitely one I would watch. You know, and I would probably be looking for, well, I mean, it has been range bound for quite a while. It's been between like $3.80 to like maybe $4.40. I mean, it would have touched $4.80 last year, January, or earlier in January.
Yes, January 25th.
Yeah, and it was like $5 last year in like June. So there hasn't been a whole lot in terms of volatility
So
over time.
what do you think it would take to change that though? Is it the same thing that you were talking about where it has to be some major shift in either strategy or because it sounds like investors are like, well, we know what you're gonna do. It's the same thing that took same predictable growth and profitability. And I find that investors don't necessarily respond to the companies that do predictable growth and profitability.
Well, I mean, let me tell you, the most we've seen. All right, there was a period in time when the share price grew aggressively. And at that point in time, this was pre-stock split. One of the reasons why was because every year the growth was unpredictable and it was massive. So you would see like 100% growth or 100% growth, and it would just be consecutive. So that would drive people towards the stock card. It was just growing exponentially at the time. Now there's still more than good growth, very good growth, but it's kind of an old story. But so maybe it doesn't phase persons as much. But in my mind, for a person that's looking at value, the stock trades at like 9 times. It trades at a price to book of like 1 point lick a bit, man. I don't. I try. Let me see if I can grab it here. So
I just gonna say I was also gonna wonder. I was gonna ask if you think because I've tried to see if there's a correlation between maybe companies that are more visible in terms of just
and maybe
whether
that's a part of it too, because as I mentioned, Lascelles Chin was the face of Lasco, right? And he obviously stepped back for a couple of years, I guess due to whatever his health issue was, and he wasn't as visible in the briefing. So you're not really seeing or hearing anything, but the brand and the company is still very much there doing what it needs to do. So increasing visibility always helps. And highlighting the wins, right? It always helps. I mean, is it what I mean? Talking about PE and all of that stuff may not necessarily move the needle for many persons now, because they're more looking at, okay, is the stock giving me enough volatility that I can enter and exit, and or is there an opportunity for me to get in and get good size and exit, when really the chart's not really showing you a lot of that. Yes, there's some price movement. I mean, moving from
It's
$4.
grown actually. Yeah, it's grown 20% in the last 2.5 months from April, up 20%.
Right, but on what volume? So those are, and in my mind, with an $18 billion market cap, there should be a little bit more tradability in the stock. But a lot of these things, it really depends. I mean, we can talk about it, but investors have to act, and if they have to see the value in it, and then translate that into a trade. That way, if more persons start to get involved, you'll see the prospects for trading it improve. But I just don't think that right now it's really a focus. And I mean, we don't know. There's so many unknowns now in terms of where this company may eventually go. We haven't really heard anything since the death of Mr. Chin. We know there was an appointment of a co-chair who will now obviously step into the role of chairman. But there are still a lot of questions in terms of what's the direction going to be. So that could also weigh on a stock as well. I know I heard some rumblings, which is really just speculation. Oh, is Lasco are they going to sell out? I mean, I don't know these things, but it is on the minds of at least some investors. So whoever emerges as the new leader, if there's going to be a new leader, or whoever within the company steps up to take more of a helm to be the face of the company, I would definitely want them to engage more with the market, so persons can actually see how the company is performing.
Yeah, man. Do interview on that, learn, grow, invest, and that will greatly help things. Yeah, I see what you're saying, and I agree, because I think, I mean, based on, I guess you said top 100 represent 95%, and based on what you were saying, it sounds like it's institutional pension funds, etc. So it doesn't sound like a large shareholder base to begin with. So maybe it's a kind of thing where persons are already investing with the mindset that this is, sort of like a long-term hold. So I think that for this situation, I guess it's a waiting to see what the new direction is in terms of where they move from here. Will there be a who the new face will be, and just kind of understanding the direction that they want to go. So usually we mention dividends as well. There's a dividend announced on the 16th of June, 12 cents per share. Do you have the yield for their dividend? You have that info?
I think for the last year, the dividend yield was like 1.7%. So it's relatively low, and that's to be expected because as we worked out, the payout ratio is about 17%. But what that tells you is that because they're paying out such a low amount of profits, if they're able to boost their dividend, they can easily boost their dividend, right? They can double it, probably even
triple. I would say triple would be
right. And that in itself could drive attention, because I do realize that persons are becoming more sensitive to good dividend paying stocks, right? I mean,
because you're not seeing the same capital appreciation anymore. So the next option is dividends.
Right. Yeah. So I mean, if you can get cash flow from it, then that makes it at least, and it checks another box for some investors, not all. but it increases the interest, because right now a company can do fundamentally well in that it profits and balance sheet and cash flow, but if shareholders can't really feel that, then that kind of takes the life out of it. So if it is
Yep.
not that, all right, then I mean acquisitions and all of those things are good, but ultimately, what is it gonna do? Because I mean, we're in a market now where not acquisitions don't necessarily move the needle for the price. Um, you have more things like dividends that when persons actually see that cash flow coming into their accounts, they get them excited and them say, all right, well, I can work with this. So,
Yeah.
so I
And
mean,
if they should triple that dividend yield and it gets to like 5%, 6%, 7%, I personally would definitely take a second look.
I mean, for me, look, if you dividends, for me to take equity risk, I need to be paid at least what I can get on government debt, and right now I can get 9% on that. So
Mm,
dividends on a whole, but the thing
interesting
about it,
point. Mhm.
no, but the thing about it, right, is with dividends, and you had it on the chart you had earlier. They start in 2018. The dividend was 143 million in total, and it moved to 2022 to 300 million. I don't have the most current one, unfortunately, right? So the dividend growth has more than doubled over the last 5 years. So
Yes.
it's not the dividend you're getting now, it's the dividend you're getting down the road, because you've already seen that, all right, the company is growing at a sustainable growth rate that they've been
Yeah.
able to do consistently. They've been able to maintain their margins. They've been able to increase profitability despite having a lower revenue growth. So they have no problem making money.
Yeah.
So they are able to, if they are able to continue along this trend, which I mean, based on what we've seen, is no reason to doubt it. If they were to adjust dividends at that kind of rate, then you're looking at a stock that could pay you significant returns in dividends, just dividends alone down the line.
Yeah. Yeah.
Mhm.
So I found one article by our good friend David Rose that actually says that they're hunting acquisitions.
Mhm.
So it says here that they've been searching. Well, they've been mentioning for almost 2 years that it's been in search for an acquisition, while a business acquisition was one possibility for the manufacturer. Um, James Rawle highlighted that a brand acquisition or investment is also on the table once it fits into the company's strategic profile. Um, we're not interested in acquiring for acquiring sake. We want to be sure that what we're
Well,
buying
well,
fully
I love that,
yeah,
because I think some people just feel say acquisition announcement means
yeah.
is gravy. Sometimes it's just fat oil, right?
Wow.
Which the truth of the matter is, there are different trains of thought and acquisitions, right? Depending on who you talk, some people think acquisitions are not sustainable ways of growing, because look, acquisition, when you say acquisition, yes, it sounds good, but there's a lot of things that can happen behind the scenes that it doesn't work out. There are
Yeah.
acquisitions that have happened and failed, and it has
Yeah.
cost companies money. So, yeah, acquisition shows that, all right, we are thinking about growing the business in an inorganic way, but you have to be careful, because some people buy things and don't know what they're buying,
Yeah.
and if you can overpay for it. So I don't really. I mean, yes, the announcement is good, but for me, I always want to see the details. How is this thing gonna work? So, and based on the article and how Mr. Raw responded, it's obviously clear that, remember, the culture there is one of being prudent. They're
Yeah.
not necessarily gonna do something to rock the boat necessarily. They want something that fits within to what they're already doing, because guess what they're already doing works.
Yeah.
Sometimes things don't work out for some companies, and them figure say, all right, we go acquire and see if this can make it work. That's obviously not what they are doing.
Yeah. So he goes on to say, if eventually don't find anything that fits, we're open to investing, and we have investment plans, which I can't go into detail just yet, but they've been reducing their debt, something that we saw, and built up a substantial cash reserve, and therefore they're positioning themselves for additional investments to expand the range of products. Yeah, so it sounds like, if the acquisition doesn't work out, then they're positioning themselves to continue to grow organically. And he says here there is still capacity to be exploited, but we have improved our capacity utilization because it goes to operational efficiency. The volume growth that we saw was easily obtained in terms of capacity of the plant. It doesn't make much sense. We have spare capacity for products that can be profitable, and you're not trying to utilize it. So I think that's it in terms of quoting from him. Okay, finally it says, we're cautiously optimistic that this financial year will be even better than last year, and they have the capacity to meet demand both locally and in export markets. We're not quite sure where inflation is going, and it's not just local, not only location inflation. A lot of the materials they use are imported, so it depends on what happens in terms of those factors. So, I mean, sounds like what you'd want to hear, right? They're not acquiring for acquiring stake. What I'll say to that point, or Gregor, we were talking about earlier, what I think is that when a company gets to a certain size with a certain capital, I would take the opportunity, just kind of gobble up with a smaller competitors, or just kind of create. If I have 50% market share, I want 60, 70, 80, 90. I mean, as much of the market space that I can take up, I can do that. Now, you're right in saying not all of those acquisitions make sense, but to me, if it's in the same industry, or even look at the Trans Jamaica acquisition, where they were able to save a lot of money through that acquisition, those are the ways in which I think it makes sense. So if you have all of this capital, use it, right? So
yeah, I mean that's the objective of the leadership on the board, right? Is to deploy shareholder capital to provide the highest rate of return on invested capital. But you see, the thing is, to acquire, it has to make sense, as you said. So it's not just going out and acquiring something. The price has to be right. The processes and whatever has to fit into their model. They don't want to have, because the thing is, if you go in and you find, all right, you want to make an acquisition, and you find that you have to adjust your winning formula to accommodate that acquisition, or that acquisition cannot fit into your winning formula, then you're gonna have a problem, right? So, the behavior of the company has been one of being prudent. So if it doesn't fit them as he stated, or as he was quoted, then it's not gonna make no sense. Better, they're already saying that, look, we have capacity. So if we don't have a deal that suits us, then we can just invest that money into our plant or into a new product line and keep churning and making money and be good. So it's not a company that is by any means under pressure to invest. But as with a lot of companies, once you build up that cash reserve and you're not able to effectively put it to work, then the shareholders might start say, well, pay us a dividend, pay a
that's
dividend.
me. That's
So,
my stand. If you're not using it for that, triple or quadruple my dividend. It's only fair.
right. And I mean, look, that's a decision that the company will have to make, because, they're looking at, I'm sure they're looking at things, and I'm sure that, they have a plan. But certainly the easiest thing for them to move the needle in terms of the stock price right now is probably to just boost the dividend. Give some joy to the shareholders,
I take
And
that.
then,
I take that.
you know,
So
we take it from there.
I'm not a shareholder, but if they should triple or quadruple that dividend, as I said, I'll seriously consider that.
Well, the
And
thing
if
is, you know, if you wait until then, you probably might not get any shares.
I know that's always how it works, right? It's so interesting where if you
Yeah,
wait for the
man.
news to break, it may be too late, right?
Yeah, man.
Any final thoughts on them before I close out?
I think we covered everything. It's a very healthy company. I mean, you're talking about liquidity. They have their current ratio is like almost 5 times. So they have no issues with cash. They have a strong return on equity, strong return on assets. We've gone through some of the ratios already. So I mean, there's nothing that I'd be concerned about with them from a financial standpoint. I mean, the stock price has obviously lagged. And we looked at some of the reasons around that, and I mean, hopefully that changes. You have Mayberry Jamaican Equities, a big investor in that company, so I mean, we'll see if they put any pressure on the board or to do something with the price. I don't know.
Usually when Mayberry is top 10, there's something that takes place.
I mean, they took them public, so I mean, they've had a long-standing relationship with the group. I'm not, as I say, I'm not sure what happens now that LaSalle is not in the picture. So, I don't know.
Yeah. All right, cool. So, thank you so much, Greg Lindo, Assistant GM of Treasury.
Assistant General Manager for Trading and Treasury.
Okay, over at JMNB. And again, JMNB has sponsored this episode, so we used the Moneyline platform to look at the price history for LSM. So definitely a useful tool. You should check it out if you're not already using Moneyline. So Alain is saying you know the company, I will need to see more of him. Guys, if I only can tell you how far ahead I have to book Greg, you have no idea. So if you want to hear more from Greg, just kind of put in your petition, and we'll try and get him for the next one. Right?
Yeah, man.
All right. Thanks, Greg. Speak soon.
All right. Take care.
All right, everyone. Thank you so much for checking out this video. Again, if you have any questions, just let me know in the comments below. There is a video, I'm sorry, that I posted this morning for me to cover. Didn't get the opportunity to go through all of my prep for it. So I thought it was best not to go through it because I didn't want to have to be going through the content live, because I want the videos during the day to be shorter. So that's why I would have taken it down and reschedule it to tomorrow, I believe. Or did I just cancel it? I'll check on that, but you should see something coming out soon. I thought with SOS triggering the circuit breaker 2 days in a row, I thought it would make sense to kind of talk about the circuit breaker now. So that's what I'm going through. And so if not tomorrow, if not Friday, then probably sometime next week. So we'll see. And yeah, I want to thank everyone for being here, for watching. If you can take a moment to like the video, I'd greatly appreciate it. Thank you so much for watching. I'll see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media